Hi everyone, this is Takatoshi Shibayama, the host of the Future Design Podcast. This podcast looks to empower listeners with perspectives on how we can challenge the social norm and evolve with better understanding of philosophy, spirituality, and ethics. Empowered individuals can have much stronger voice and influence in bringing about revolutionary changes in the world, whether you're building businesses or technologies. My guests and I speak about social constructs that are commonly accepted in the world today that's not working anymore, and how to rebuild them with ethical values to create a better future. In this episode, I speak with Leslie Lamb, the podcast host of Crypto Unstacked, where she interviews the greatest minds in crypto blockchain space, covering topics of the latest decentralized finance projects, Web 3.0, and crypto investing. She's also the head of partnerships at Amber Group, a crypto financial services company based in Hong Kong. We dive into the reasons why crypto and decentralized finance has a place in this world. I feel like there's a generational and paradigm shift happening in the backdrop of the global financial crisis back in 2008. No longer do the Millenials and GenZs and even for GenXers want to accept the economic and systematic construct that keeps them out of control of not only their wealth, but how their society is run. They want clarity, transparency, and systems that work, not by some people in backdoor rooms making biased decisions, but by technology that allows for equal opportunity to all. So without further ado, here is Leslie Lamb.
Future Design Podcast.
Thank you, Leslie Lamb, for being on our Future Design Podcast. Welcome to the show.
Thanks so much for having me, Taka. Great to be here.
You're very welcome. I'm very excited to have you on as our guest. You've been the host of the Crypto Unstacked, which I listen to quite a lot. And I think compared to the other blockchain related podcasts out there, I actually really enjoy your conversations with these spectacular minds of the world, and I get so much out of it. So I definitely wanted to pick your brains because you picked all the brains of the best in the crypto industry. So I wanted to talk to you about it, those kind of topics, which covers like DeFi, Web3, crypto investing, super exciting topics. And you're also the head of partnerships for Amber Group, which is a Hong Kong-based crypto finance company. So before we dive into the esoteric world of crypto finance, could you tell us who is Leslie Lamb?
Yeah, that's a great question to start with because it can touch on so many different things, right? Who am I? I am a lover of all kinds of disciplines. So I would say I'm more an interdisciplinary thinker than more a vertical specialist in one thing or another. That was the case when I was in uni, found a love for languages, for economics, and for finance. And I think living in that world where I'm just constantly drawing from different disciplines and finding connections and convergences, of themes and topics, that's what really drew me to crypto. Because that is exactly what crypto is, right? You can look at it from a social angle, you can look at it from a philosophical angle, or from a technologist's angle, political angle, right? There's so many different entry points into this industry. And in terms of how I got into crypto, with this kind of interdisciplinary interest driving me, it was this back in late 2012, early 2013, when I was in Germany at that time doing an internship, and during that time there was only one cryptocurrency to speak of, which was Bitcoin. We didn't have the whole list of coins that we see today on CoinGecko, right? But it was in Germany that I found out about Bitcoin. There was the odd cafe and bar here or there that was accepting it at that time. And it was very interesting because at that time, the primary use case for Bitcoin was for payments, right? And that narrative seems to have changed quite a bit since then, from a payments method to a specific store of value narrative. And it was very interesting being in Germany at that time because Germany was and very much is still a cash-based society. So there was never a need for adopting crypto, or at that time just Bitcoin. And what I figured from there was, wow, if this is a fringe industry And this industry was cropping up as an alternative to the traditional finance industry. There must be a couple things going wrong in the traditional financial industry for this innovation to even, come about, right? To emerge as something that the, CryptoPunks, or cypherpunks rather, or technologists were really pioneering and advocating for. So anyways, at that time, I hadn't really dipped my toe into traditional finance at all, hadn't really understood what the capital markets was about. And so I decided to do exactly that, go into the finance industry, figure out what it's all about. And so I started my career in wealth management. This was in New York. And I really didn't come around to crypto full time until I moved to Hong Kong, where I am currently. And I've worked with a few crypto companies over the years, but ended up joining Amber back in 2018. And now I run the Crypto Unstacked podcast, which is a fully crypto education podcast, because I think that is where the gap is currently. As we're seeing crypto become more mainstream, more influencers, supporting various types of cryptocurrencies, the one thing that continues to lack today is education, and I know that's what you care about as well. That's why you run this podcast, in part to, introduce your guests to this whole new world of crypto through very informative conversations, right? And that's really what the Crypto Unstacked podcast started. Of course, it was during the COVID time when really no one was meeting up in person, but I just found, look, this is the way crypto is headed. It's all about education and communication to sort of the outside world beyond crypto. Yeah.
No, I totally understand. But back in 2012-13, obviously not a lot of people heard about Bitcoin to begin with. I remember just listening to the news about Mt. Gox being hacked. And at that time, I was thinking, Bitcoin, what is Bitcoin? And I looked into it a little bit, it's a very superficial level. And I thought, well, there's a lot of e-money cards out there. So why do I need a digital money anyway? Because it's already digital. Why the heck does anybody really want another weird thing that you can, trade and stuff like that? I just really didn't get into it. And I was working for the hedge fund industry. So very different mindset back then. And I just kind of dismissed it. But there must have been something that really caught your attention about Bitcoin. And you mentioned about payments, right? And I'll get into my story a little bit later about why I thought Bitcoin was great for payments, but you actually in Germany came across Bitcoin and you thought payments and you got interested in it. So I want to pick your brain on why you actually thought it was interesting.
Right, because it was the first type of cryptocurrency out there, right? And if it was supposed to be an alternative form of payments, let's try to figure out what the current options are and kind of benchmark Bitcoin to that in terms of the pros and the cons. And I happen to be in a region that didn't need crypto at all, and that in and of itself was very interesting, right? Had I been at that time doing research in Africa when M-Pesa was just kind of getting kicked off the ground, and where there is this element of leapfrogging from no payments infrastructure to mobile banking, I feel like the story of crypto adoption would have been very different in my head, right? From my worldview, there would be a sense of, oh wow, there is really a need for crypto adoption. But at that time, I think a lot of people were still wrestling with the question, why do people need Bitcoin? What value does it serve? I mean, there was no real sense of speculation at that time, because what were you speculating on, right? There was a burgeoning technology that didn't have much in terms of liquidity at that time. There was the odd exchange here or there, but we weren't thinking about it as a speculative asset. Again, it was supposed to be for payments. And so the fact that merchants, a lot of the merchants that I spoke with in Germany, I was in southern Germany in 2013, and having them just ask the question, why do I need this, was very, it was very interesting, because they were, a cash-based society, and there was not this, I guess like this pain point that they were feeling. Being charged 2% on every transaction because they were accepting, Visa and MasterCard or the like, right? So that's why it was interesting. I was just trying to figure out if this thing were to actually develop as a technology that the world would soon adopt, why was it needed? And it just wasn't really clear at the time, but clearly over the years, now we're in 2021, we are starting to see, real utility behind crypto, now that asset class has expanded way beyond just the one Bitcoin, right?
Yeah, I understand. When I was living in Hong Kong, and also I live in Singapore right now, there's a lot of people who are foreign domestic workers, i.e. maids for the house, who are from Philippines, Indonesia, Myanmar, and they're always remitting money back to their homes using Western Union, money exchangers. And now there are some apps out there that offer digital payments through their apps onto their post office or banks or Western Union on the other side. And that's kind of when it hit me at the first time about Bitcoin. It's like, can't they just send that Bitcoin across to the other side and not pay all these exorbitant fees? And that's kind of when I thought, and I would have never imagined it if I were living in Japan, because there's no foreign domestic workers that were living really close to me, or thinking about M-Pesa or anything like that, because it's not really ingrained in my life. It's not part of my everyday life. But it's only because I was living in Hong Kong, it just kind of struck me at that point. And you probably made that connection together because you were talking about M-Pesa, right? So that, I kind of really thought this is not for people in a developed world. We do trust bank accounts or banks, right? We do trust the SWIFT system to be able to send money across, even though it might take a day, even though we might have to pay a little bit of money, but that's the cost of transacting. But now it comes this thing that you don't actually have to pay much, and you could just send across different borders without having to deal with physical locations or having an account at a bank. I mean, that's kind of when it hit me. It's like, oh my God, this is phenomenal. And I think that kind of Eureka moment came for you as well, is kind of what I'm sensing from what you're saying.
Yeah, I think that's correct. I mean, it came from asking a ton of questions. What was the utility for this going to be if Bitcoin were to go from the small crypto, under $1 billion market cap that it was, to now nearly $1 trillion. I mean, past $1 trillion market cap. Market's down, gone down a bit today. But pretty much this incredible rise of Bitcoin, it can't just all be speculation, right? And some people will say that Bitcoin purely serves as a speculative use case currently, because it can't be used for things like payments, which it was intended for in the very beginning. And because it's adopted this store of value narrative, similar to gold. That's why a lot of people call it digital gold, right? So as I think the narrative within crypto has expanded from Bitcoin, that's where we have seen room for other crypto assets to adopt, other types of narratives that perhaps more align with what people were thinking about, in the very, very beginning when Satoshi Nakamoto, created Bitcoin, right? And, that is the story of Ethereum. Whereas Bitcoin invented the concept of trustless monetary policy, and, being able to transmit payments without a trusted third party, Ethereum came in alongside, DeFi a few years later, and then the whole Web3 world, right? And extended this concept to all kinds of other interactions on top of the blockchain, layer, right? Things like trustless lending, trading. There's something that's quite popular in crypto as well called liquidity provision through something called automated market makers, such as Uniswap, and all kinds of other financial interactions that have really removed the trusted third party node, if I can call it that, right? And I think as people get more comfortable with this type of reality, that we are able to do so much in a trustless kind of way, that's where we'll see things like the total value locked in DeFi go way beyond where it is now. Right now, I last checked, it was at $80 billion. 8 months ago, it had only surpassed $10 billion, right? So it seems kind of big now. You're like, wow, this fringe industry has $80 billion locked up in it. But, who's to say that can't surpass into the trillion, dollar mark in just a few months' time, right? So there's really a lot to unpack, a lot to talk about, but I'll let you take it away.
Yeah. So I think that, you're talking about the concept of DeFi, which is the original idea. So decentralized finance was Bitcoin's original idea, not put into the elegant word of DeFi, but that was a true concept. And as you say, that it just over time, let's say taking the time frame from 2012, 13 to 2017, it had become a massively speculative market after that. And people were trading and all the ICOs were coming out, and I hated it. I really hated it because it was taking away the whole idea about decentralized finance into the world of, I just want to make money and, Lambo, Moon, whatever it is. And I just didn't really like that. And I just held on to my Bitcoin thinking maybe this will just kind of go away someday. But no, actually it kind of split into two. Actually still continuing all the speculative things, creating derivatives. I think certain exchanges are coming out with very unique tokens that represents a certain trade that you can also tokenize that and trade that, which is really interesting because that's financial innovation in my view as well. There are perpetual swaps that don't exist in the traditional finance world. So we haven't seen much of real financial innovation in the traditional world, but in crypto we're seeing massive cool ideas coming out and thinking, wow, why didn't this exist in the traditional finance world? And now it has also branched out into this true meaning for me of Bitcoin blockchain is decentralized finance. And you say you could do lending and all these things on the Ethereum or various blockchain protocols are coming out with these that has these smart contracts available so that people can remove trust out of the equation and trust the technology, trust the smart contracts in order to transact. And what I think is very interesting, aside from all the crypto investing world, is that decentralized finance still is immature, right? It's still new. Everybody's trying to think of coming up with new ideas. In concept, super cool. I understand it if you have a background in finance or have some financial literacy. But if you're a person in a certain area that you didn't have that kind of education and read those white papers, I remember the first time I read the white paper of DAO or MakerDAO or the concept of DAO, I was thinking, wow, okay, that's cool, but it's really difficult to understand because I had to read it 2 or 3 times to really understand what it was all about. Now, how can we bring DeFi into the mass population? And I think that there's a huge gap in between. And this is why you're doing your podcast as well, to break it down, make everything a bit more comprehensive for the average folk to understand. But it's still kind of in a very esoteric world, in my view. So what do you think needs to be created in order to kind of bridge that gap?
That's a very good question. And I'd like to maybe step back a bit for your audience to have them understand what decentralized finance, what its mainstream adoption is really about. And to me, it's the adoption of the mentality that the current monetary system is not working for everyone, and so we need to fix it. Very simply, without going into any of the technicals, that is the mentality that drives all of the activity that we see in DeFi today, right? It's about prioritizing experimentation and iteration of so many different financial solutions, over accepting the status quo of things such as making payments, taking out loans, trading, and even monetizing assets, which we can talk about later through NFTs, right? Making payments is sometimes super complex, and in many regions, it's very costly. For me to send, something cross-border, luckily, myself being in Hong Kong, a lot of my payments going to, say, a region like the US, it's okay. Like you said, sometimes it takes a little bit of time, and sometimes the wire transfer gets, bounced back for whatever reason. I have to call the bank, and it's really annoying, but the main thing is that it works, right? The money will get there. But in DeFi and in crypto, I guess, the question that we anchor ourselves to is, how do we make that process easier and cheaper? Loans, right? Taking out loans is a super, super cumbersome process that involves, offering kind of this long list of credentials. And even when you fulfill these requirements, it doesn't guarantee that you actually get the loan, right? Based on gender, race, class, right? So the question then in DeFi is, how do we make this process easier, less intrusive, more democratic, and more transparent? Let's talk about trading. Trading in the traditional capital markets works. The infrastructure is very built out. You all know, right? You come from, a capital markets background. It's rather capital efficient as a retail trader, but it's nowhere near as efficient as what crypto enables trading to be, right? What it unlocks. The process of just getting set up at an account with, interactive brokers, right, can take ages, and they ask you a list of questions, and you want to take out leverage, you are being asked, to make tests, test trades and all of that. So then the question in crypto is, how do we make the onboarding process less onerous, right, while increasing capital efficiency through, in DeFi specifically, through a more modular framework, which means being able to just leverage integrations between various DeFi platforms. And then when you think about things that are now kind of bubbling up in the industry, like NFTs, so non-fungible tokens, which is a really, really hot topic right now, being covered by everything from like Vice News to New York Times and of course Bloomberg, right? What are NFTs really about at the end of the day? It's about enabling a larger class of creators to monetize their work to a large audience in a very transparent way, right? So the philosophy behind crypto is not just improving an inch from the current way of doing things. It's about transforming the societal construct around money, right? Breaking down barriers that prohibit large swaths of people from accessing financial solutions. That's what DeFi really is about. And without this understanding that things need to change, right? Going back to what I was saying earlier, this question that I was wrestling with: why do things need to change? Why does this alternative industry need to exist in the first place? It's always good to start with these types of questions, because then you'll better understand why there are all these protocols emerging in the industry. Sure, there are a few coins here and there, all these dog coins currently that are trading like mad, but then if you can remove the noise from the actual building that is happening in the space, that is a bit separate from the speculative nature that has kind of come up in the crypto industry, you'll start to find that there are real reasons builders and founders in the space are motivated to build. It's super important to understand that and remember that, as perhaps people in your audience who aren't in crypto yet, as they learn to understand why crypto is becoming an investable asset class and why they should give it a chance. It's important to start from these questions.
I totally agree. And also, I think it's a generational thing as well, because now with information technology, information is abundant. You can find out a lot of things about many things. It's just a couple clicks of strokes of keys, and you find that information that you need. But in a previous world, where every system behind whatever it was, let's say monetary policies, the banking system was very vague. Nobody really knew what SWIFT was unless you have to look for it. And what actually is SWIFT, or how does fractional reserve banking work? I mean, nobody even cared about it. Nobody knew about it. I think it's a generational shift where people want to know. They want to really know what's going behind the scenes, because things like, I'll take an example like GameStop. Like why weren't people able to access their shares, or why weren't they able to put on a certain trade? Because they thought, they had it. All right. I thought they thought it was somewhere in a custody bank or something that they're able to do it. They thought Robinhood had shares of GameStop, right? And then just find out, no, actually, it's not how it works. And people want to know that what happened, what goes on behind the scenes that we're not actually privy of and this generational change of I'm a GenXer, right? So a bit older than you, and I just accepted how the world is generally because I just didn't have the information. I didn't know how to figure it out. Now you can figure it out, and now everybody wants to know what the heck is going on behind the scenes. And I think this blockchain movement, or the crypto movement, is also combined with that idea that I want to see everything that's going behind the scenes, right? That's why you don't need to trust anything. You don't, because that trust has been broken. And I want to see exactly what the true nature of this financial world is happening behind the scenes. And then I think crypto or blockchain allows you to see through that and understand that, oh, okay, now I understand. So even though they call it trustless, you can trust it because it's so transparent. You know exactly what you're getting, right? And that's kind of, I think, what's really made this industry very popular. And I think that's the fundamental, like really deep down, what makes this industry so special to me. And so what I think about, let's say, things like, DeFi or something like that is like, you think, why can't I get these loans? As you say, it might be racial, it might be social class, I don't know what it is, but nobody tells me why. Right? They just don't tell you. They say, oh, you can't get this loan. And then you ask them, why, sir? Why can't I get this loan? Well, bank policy or whatever it is. They just don't tell you, right? Everything's so vague. People want to know why, right? People are demanding to know exactly why these constructs are there, right? And they want to break it down because it's not suited to them anymore. This whole world of like information technology has completely changed how people view the world. I'll let you take it away from there.
Yeah, same thing with just dealing with banking, right? Setting up accounts and dealing with accounts, and it's becoming, I would say, a very politicized process. It's kind of weird. You're like, what does finance really have to do with politics? But being here in Hong Kong, there's a lot of influence from the U.S. side. I won't go deeper into that, but you can read a whole bunch of things that can point to the sense of when you're dealing with a traditional bank, you're not just dealing with the branch in your neighborhood. They're being pulled by strings from all sorts of institutions, and things just aren't always what they seem to be. When you're opening up an account with a bank, again, you're not just dealing with the branch, you're dealing with the headquarters, and more than that, you're dealing with a very connected banking infrastructure. And so when you think of yourself opening up a personal bank account, why do you matter? It really doesn't matter if they lose your business or not, to be honest. Sure, you can say if you open up a corporate account, it's a little bit different. They're able to cross-sell you in so many different ways. Okay, fine. You're a more valued customer. But for the people that I really care about, because I'm one of them, the individual investor, the individual person who is looking to access very basic financial services, keeping a bank account open, using a bank account to fund payments and to take out loans. if your bank account is closed, it's closed. There is no fighting. There is no reasoning. Like you said, you will not get a straight answer. The actual only straight answer is, we've closed your account. We're sorry. And there's just nothing you can do about that. And I mean, you're really then, as I say in crypto, you're really then holding the bags. Like, you're like, where do I go next? Great, I've been refunded, my funds in my bank, but then I have to go elsewhere. And then you begin the whole process again of onboarding to a new bank, and then you have to start that relationship all over again, right? And I think the beauty of crypto that is magnified by decentralized finance is that we have now so much optionality. And because of that, we are seeing a diversity in various business models, right, in Web3. Something that we've been talking about is, the trustless nature of crypto. Well, something that you can take advantage of is trustless asset management, right? If you don't prefer to deal with a centralized counterparty, you can learn to trust smart contracts, right? Handle your finances, from investing to trading and lending, in a decentralized way, all with a wallet like MetaMask connected to your browser, right? So of course a prerequisite is having Wi-Fi, internet connection. But once you're on, you're on. Really the internet is your oyster. And that's a beautiful thing, right? You're not asked for KYC, this and that, and you feel like you've divulged your entire life before you even made a trade or taken out a loan. The process now, looking at decentralized finance from the 2021 versus even, I would say, 2019, that process has been streamlined extremely well, actually. There are complaints, of course, when it comes to things like gas, and it's sometimes expensive, sure, to make transfers and to make trades. But again, the technology that decentralized finance allows is the fact that you can trade as a sort of semi-anonymous person. And you have access to so many different financial solutions, all with a few clicks, right? So that's one type of business model. I'd say another type of business model, going back to something I talked about earlier around non-fungible tokens, is that it's a unique digital asset whose ownership is now fully being tracked on a blockchain. And what this enables is traditional physical assets like artwork, right, to be represented in a very unique digital form. And when you add on a layer of programmable scarcity enabled by the blockchain, wow, it really opens up the design space for what is possible in the creator domain, right? It's creating new forms of value, new value chains, because there are new monetization channels, right? And from a macro perspective, and this is similar to what I talked about for how to look at DeFi, is that NFTs are kind of part of this wave of financializing internet culture. And so to me, when you change that culture, you're changing behavior. And then we're going full circle to why crypto is interesting in the first place, right? It's all about understanding why things need to change. And then you understand why there's a whole crop of crazy people in crypto trying to test out things, experiment with things. It centers on this one thing. It's because people think that the way things are being handled right now, particularly in the monetary system, the behavior is kind of, it's gone south. And so things need to change. Right?
Yeah. And I think the key word that comes to mind when I hear you talking about this is that the world has changed from exclusivity to inclusivity. And I think it's a huge generational change on that as well, because let's say, my parents' generation growing up in the 70s and onwards, and they saw this massive change in society where everybody's starting to get richer, especially for us who were grown up in the developed world. Everybody was getting rich, so you can hog everything you want and then you keep it to yourself, because then you could be richer and richer, right? And you don't need to share because you want to be rich. But now we kind of hit this road, let's say back in 2008 when the global financial crisis happened. And then there's been such a stagnation in economy that even if you hog things, it doesn't really make you much richer. And then when you start to share things with people, then you start to open up a lot more different concepts and revenue models where when you share things just like Airbnb, or it could be Grab or Uber, or any of these things, when you start to share, you can start to make more money. And I think that kind of opened up with social media and all these things. And you find out that by sharing, you can make more money. NFTs. Yeah, sure. Make your NFT, you buy your NFT, but if you actually hog it, you're not making money off of it, right? Share it, right? Now that point of authenticity comes into play, because if you're sharing it, everybody wants to know if that's authentic or not, right? And then you can say, I have something authentic, I'm going to share it with this world, and I'm going to make money off of it, right? I mean, we open up the whole world of retailers, institutional, whoever they may be, and you can share it with everybody, and that's how you kind of start to generate your own wealth. And I think that's all that comes into this whole world of DeFi, Web3 and all these things as well. It's that concept of inclusivity. Now, you spoke to a lot of people in these worlds of DeFi, Web3. What are some of the interesting topics or concepts that you heard so far that you can share with us?
Yeah, so I just want to touch on your one point about the generational shift there. That is absolutely the reason why we even see crypto being more adopted by the mainstream today. It is this higher degree of tolerance for experimentation, and as part of that, embracing decentralization, right? If trust has been broken, as you say, what is another way that we're able to kind of gain back that quote unquote trust of working with people, right? It's kind of a weird thing to think about, but in a way that is done in a totally trustless way. And when you're able to foster collaboration without trust, that's where you are able to do things better, like working remotely. I mean, things all connect, right? In terms of concepts, like COVID, as terrible as it has been and it continues to be, has enabled a lot of these concepts in crypto to come to light and to really shine, because it mirrors a lot of where the rest of the world is heading from a totally non-crypto perspective. Like for Coinbase to say, we are closing our San Francisco headquarters and we are going to be a remote first company. I mean, that takes a ton of trust in your employees to be doing the work, using collaborative tools, checking in on each other, right? You're not sitting right next to your boss, for example. You're showing up to a Zoom call, right? But the rest of the time, you're literally just on your own. You can be on the beach and still hopefully be productive. They can't tell you what to do once they've made that decision, right? But it's the same sense of kind of being okay with taking on a bit of risk when it comes to changing the status quo. And so crypto networks, I think, are showing us that trust can be substituted by things like proof of work, right? Hence the saying in crypto, trust, don't trust, verify, right? And so we're not in a fully decentralized world yet, but I think we definitely are getting there. And so when it comes to your question about what are some of the concepts in DeFi, I touched actually a bit on them already with the trusted asset management and NFTs, but I think one that we probably haven't touched a lot on, and it doesn't necessarily center around DeFi, is the whole stablecoin movement, right? Stablecoins enable faster mobility, capital mobility, right? It is the go-to on and off ramp for traders. Full stop. Without stablecoins, DeFi will not be what it is today, and even the CFIs, the centralized finance part of crypto, would not nearly be as efficient as it is today. Thank goodness we have this, Silvergate and Signature for banking solutions, right? They are willing to bank crypto companies, and that whole thing now works very seamlessly. The company that you work for, the company that I work for, I'm pretty sure we both rely on those two banks, and hopefully others will follow suit. But if you're wanting to participate in the crypto industry without needing to get a bank account, you can do that. And you can do that through stablecoins. There are exchanges in the world that don't run on bank accounts, right? That don't operate rather with bank accounts. They run fully within the stablecoin ecosystem. And so what this does is enable people to rely on this really reliable value transfer mechanism, right? Because stablecoins are able to drive a lot of the volume that we're seeing on, DeFi and CeFi trading. So it's not to be underestimated, because if this continues to kind of increase, right, in utility, which is inevitable, then I think for those who are looking to get into crypto, stablecoins offer that first step into the ecosystem, right? And you can connect this to what lots of other people care about, not just in DeFi today, but it's yield, right? In this world that we live in today, how do we get yield? That is a super common question. And for those who are saying, all right, I don't want Bitcoin, I think it's too volatile for me. I don't understand Ethereum at all, even after Leslie's tried to explain DeFi. I don't want to get into all that. But the stablecoin thing, where maybe it's, it is backed one-to-one with US dollar reserves, I can, get my head around that. That, can offer the first step in this sort of passive yield generating playbook. And all that requires is for you to take your fiat dollars in your bank that's pretty much earning zero, turn them into crypto dollars, right, into these stable coins, and then quote unquote lending it out to a platform, whether it be in DeFi or a centralized platform like Amber, and you can automatically get yield on that. I mean, just doing that first step of converting, let's call it USD into USDC, right, is a huge step that then enables you to access a whole bunch of other things within crypto. So I always think if you're trying to get into the space, just start step by step, right? Understand what is the lowest hanging fruit? What is the easiest way to get into an industry? Start there, learn to trust the process, right? Learn what you don't like, learn what you hate, and then soon as you go through that learning curve, you'll figure out what platforms you like to deal with, which ones you want to avoid, and then you kind of get to build up your own mental model of what crypto means to you by way of participating in various parts of the tech stack. Instead of being like, wow, there's so many different protocols, let's try absolutely everything. Let's go from not having tried, Bitcoin or Ethereum to just like going to MetaMask straight away and trying to figure it all out. It's like that then becomes a very complex process, right? So make things easier on yourself and just break down these concepts, and just start with one thing, and that will inevitably, if you feel comfortable, lead you to the next thing, and that's how you become a crypto enthusiast. So I do that.
Yeah, and I think that what you say is completely true. Not everybody wants to get into Bitcoin or DeFi in the beginning. And if you were in this industry or really had interest in crypto from, let's say, 2013, you kind of grew with industry. So you kind of build out your knowledge base up until 2021. So you're probably in to know about what DeFi does and how the mechanism works. But people who are coming in today in 2021 that has not seen the evolution of cryptocurrencies during all this 2010 to now, it's massively overwhelming because there's so many concepts, so many new projects out there that it's just hard to get in. And I really like the idea that what you just mentioned is, then why don't you convert some of your fiat into US dollar stable coins and then lend it out? Okay, so let's dive into that, because some people still don't understand what that means, and we want and as we speak about transparency, it'll be really interesting to know, and I think a lot of our audience as well, is how does that lending mechanism work? If I give you US dollar stable coins, why do I get a yield back?
Yeah, so that's a very good question, and I'll use Amber as an example because this is what we've been focusing really all of our efforts around, right? A little bit of background there is that we've been working with a lot of the institutional players in the market since 2017. Over the past 3 years, we've really built up the rails to facilitate those who are looking to get into crypto and to facilitate larger trading sizes. We've been focusing a lot on these guys, but these guys come in with a rather sophisticated understanding of what they want, and they're really just looking for guidance around how to best do it. Right, their learning curve is not really like that steep. But when you're speaking to individual investors looking to get into crypto on the trading, investing, and now the earning yield side, right, getting interest on your crypto holdings, that process for a little while was still kind of not necessarily cumbersome. It just wasn't very easy to understand. It wasn't very intuitive. Right, the whole margin lending feature on Bitfinex was really the genesis of this sort of yield process, right, of getting yield on your Bitcoin. And then what ended up happening, and then this is why I mentioned stablecoins earlier, is that with the facilitation of stablecoins, you're now able to participate in this industry in a way that doesn't require you to get exposure to the volatility. And so with just the stablecoins, as an example, on our Amber platform, whether it be the web-based platform or the Amber app, right? What we've said is this: to allow you to earn yield on the platform, you can do two things with us, basically. One is to simply deposit the crypto. It could be Bitcoin, it could be Ethereum, it can be the crypto dollars. Deposit it on the platform, and you auto generate interest. It's instant. You don't have to do anything. It's as passive as generating yield gets, right? So that's something that we call like flexible earn. And you're probably asking, what rates can you get? Well, that's obviously going to be a variable rate because you have access to daily redemption, right? So interest pays out on a daily basis. You can withdraw it, move it somewhere else, or keep it on the platform, right? Up to you. Or there's another way where we've said, look, you should be able to get yield on your own terms, right? There's a lot of these platforms that offer kind of like, you have to lend out your crypto for 30 days and in return we'll pay you a fixed yield. For us, we say, look, you can customize your investment from anywhere between 1 day to 360 days. Up to you. And based on that, you get a fixed yield. that might change kind of, over maybe like a 6-month period or maybe 3-month period if the market is moving very, in a very crazy way, very volatile way. But generally speaking, we keep those rates, the same. And so, what you can do there is get paid a fixed yield, but also have access to early redemption, right? All based on whatever your risk tolerance is and whatever your liquidity preference is, right? And that's really not the case for all the other platforms out there. So the whole point is to say, participating in crypto shouldn't be difficult. It shouldn't be a very cumbersome process. To earn yield, it can be done in a very transparent way. You can think of the loan as a bilateral loan between yourself and Amber, right? And upon maturity, you get your principal and your interest, right? If you are investing in this sort of fixed term product. And so there's really nothing much else to it. It's very intuitive. And so as people get more access to these types of retail trading platforms or retail crypto finance platforms, what they're faced with is optionality. And something that we really care about as we realize this is the case, this is the reality, is that we need to adopt to user mobility, right? And what I mean by that is basically, why should someone go elsewhere when we offer all the things on our platform? What can we do to provide you with all the services that you need? And that is a sentiment that is being, I think, adopted by many of the other integrated crypto finance platforms as well. It's not just trade on us and then go to an exchange, right? It's not, get yield on our platform, go elsewhere to trade. It's you can trade, you can invest, you can finance, you can take out a loan, right? All on this one platform. And as as crypto grows and it matures as an industry, and there are more functionalities that kind of emerge within this industry, we want to be able to cater to that as well, right? So things like facilitating, financial service tools for the creatives that are getting into this space, right? A lot of people now, I guess, have a type of education where they're like, okay, I know where to go to mint my NFT as an artist. I understand how I'm getting the royalties, blah, blah, blah. What do I do once I make it, right? I mean, there's a whole other end of that spectrum that surrounds itself, and anchors on asset management, right? And so these are guys who are not getting into crypto because they understand Bitcoin or Ethereum, but because they found a way to monetize artwork, let's call it. And then they're learning about crypto. And then as part of that process, they're going to need to understand various crypto finance services and tools that they can use to manage those assets, right? Once they've monetized their work. So that's something else that might seem a bit fringe right now, but some of the biggest companies in crypto are already thinking about doing that, right? And so the whole point is to streamline all of these services for as wide of an audience as we can reach, basically. Not to just be, to take what you said earlier, to service a very exclusive group of people, the institutional folks. They'll be well taken care of. I'll assure you that. What about everyone else, right? How do we adopt the sense of inclusivity and say, great, we don't want to repeat the mistakes that we're seeing in the traditional financial world, which closes off a lot of access to basic financial services. How do we do that if it's not going to be in a totally trustless way, like in DeFi, right? As Amber is a centralized finance platform, how do we still create an ecosystem for those who do want to use a platform like ours and can continuously, take advantage of the new functionalities that we're introducing based on how the market is growing, right? How the crypto market is growing.
Right. So just going back to the lending part, right? So if I go to a traditional bank and I deposit my money with this fractional reserve banking system, they can actually make 100x of my money and lend it out to somebody, and they won't give me why I can't borrow off of that right? Because I put my deposit, you make fake money, and I'm asking you to lend me that fake money to me, but you're saying no, these are the rules, or they don't even tell you what the rules are, and they don't even give any portion of that fake money back to you. So in your platform, so let's say I do deposit USD stablecoins, and you say that I'm lending it out, so you must be lending out somewhere else too. So can you like unwrap us like that concept for us? Like, what's the system behind if I give you 10 US dollar stable coins, where does that go?
Yeah, so like, how are we able to generate interest, right? And actually pay you that interest, because it surely doesn't come from a fake tree, right? A fake dollar tree. So yeah, to your point, right? There are a lot of platforms out there, including ours, that deals with other trading counterparties that require, right, financing, right, for various trading needs. So that is one way. We lend out to certain counterparties, select counterparties, always on an over collateralized basis, right? Lending to institutions, lending to corporate clients, right? And we generate obviously an interest income on that, right? That's one way. Another way, which has become, very, very popular across crypto, is margin trading, right? Getting access to leverage to do what? To be more capital efficient, right? With your balance sheet. And so a lot of this is also used, the funds that are deposited to the platform are used, right, to kind of enable that service, right? Funding those who do require margin, right? And so we get basically margin funding payments from users who are, financing leverage positions. And then the third aspect is probably something that all trading platforms like ours, earn interest, and that is basis trading, right? Capturing the interest rate differential, the difference between the futures price and the spot price of an asset like Bitcoin or something like that. And so this type of synthetic lending functionality is what powers, I think, a lot of the interest, right, that traders are able to get, or yield rather. And so through these sources, we're continuously trying to find ways to obviously capture as high of a yield as we can in the markets, as we first and foremost are market makers, right? We started off as a market making platform, a trading platform, and then we got into the lending side. What you're sometimes seeing within the retail space is the opposite. Companies start off as a retail or whatever institutional lending platform, right, offering interest rate accounts, and then building an OTC service, right, or an in-house, trading team once they've gotten big enough, right, and they want to do other things, monetize in other ways, whatever the case. So we're the opposite of that. Our bread and butter has been in market making. So trading is our core business, right? And so around that, we understand how to manage risk, because we would be dead today if we didn't pay attention to that. And so as we understood, how to manage risk across client accounts, we understood what types of counterparties we were very comfortable dealing with. That's when we allowed ourselves to be like, okay, let's get into the lending space, right? Because what you hear a lot is, what if your counterparty defaults? And look, if this were March 2020 again, the main question is, how do you know those who took out loans with you are going to pay you back if you margin call them, right? Or if you say, hey, look, like you're underwater, you got to pay us back. If they don't, and they file for bankruptcy or whatever, that's a loss on your balance sheet, right? So even on an over collateralized basis, sometimes if there's a sudden market movement, that is a risk. So it's always important to monitor not only those you are working with, existing counterparties, but also those who potentially will work with you down the line, because one, you don't have a sort of history of working with them. You don't know their quote unquote credit history. And number two, you don't know where the market is going really, I mean, we've had just a crazy couple hours, kind of Asia overnight. Woke up this morning and Bitcoin's down to like 48, 49K. I'm like, whoa, what happened? So it's kind of like you have to be ready for all of these market movements, right? So yeah, I babbled on a lot, but that's kind of how that's how we generate interest on our side, and two, that's how we view the internal operations of how we run our business to enable things, like interest rate accounts effectively for our clients.
Yeah, that's very insightful. I think a lot of people didn't really understand, because sometimes I go to people as well and say, you could just buy US dollar stablecoins, you could earn a yield on it. I do tell them what goes on in the background, but it was like, oh, okay. But most people, when they just hear, why do I get 15% on my US dollar stablecoins? Because where is that money going to? So it's really good to unpack what's going behind the scenes, because that's really what crypto is all about, right? So I think we cover so many things, and I love to wrap this up. But do you have any parting messages, thoughts that we could tell our audience?
Yeah, I tell everyone who is interested in crypto, invest in content, because it's pretty much free, right? And by even tuning in to this episode, whether you listen to it in full or not, it is this idea that you are trying to invest honestly in your future. No matter how old you are, if you're on the younger side, Gen Z, or Millennial, Gen X, so on. It's never too late to ask the question, why now? Why is crypto emerging now, right? What events in our, economic history have led up to this point, right? What's happening in the world right now from a macro perspective that is enabling the acceleration of crypto adoption, apart from the Elon Musks and his tweets? What else is out there driving this industry forward? Right, with the likes of banks, traditional custodians coming in, investing in companies and projects in the space, collaborating, right, bridging the traditional financial world with the crypto world. All of these things stem from you asking questions about why crypto, and that's why I really appreciate you for including crypto as a part of a new angle to your podcast, Taka. Because it really does connect with all sorts of disciplines, right? Going back to the very thing that I said at the top of the conversation, right? Connecting disciplines, enabling you to think about, if you're not from the crypto or tech or financial space, you're coming from another industry, how you can contribute to the space as well. Not everyone is a technologist in this space. I'm certainly not, right? So whoever is tuning in and listening or watching this will have something to contribute, but it all starts with actually investing in education to understand what is missing in the space and what can be improved upon.
Awesome advice. Well, thank you so much for your time. I really had a great time. And for anybody who's listening, tune in to our Crypto Unstacked. Really great show. I loved it. I always listen to it every week. Go check it out. So thank you very much, Leslie.
Thanks so much. Had a great time.
Hi, this is your host Takatoshi Shibayama. Thank you for listening all the way to the end. Now, if you enjoyed or disliked this show, please let me know by writing in the comment section. The only way I can improve or add value to you is through your voices. If there are any topics that you would like me to pick up, please also let me know in the comments. I'd love to start chatting with you all. And if you would like to continue watching the show, please subscribe. Thank you.